Okay, we continue with the paper multiple choice. This is a paper that I'm going to do with you all for today. Okay, the first question. Which statement is correct about the accounting and the bookkeeping? Bookkeeping is basically involved with the basic recording. There is a key job for the bookkeeper. Accounting will take the bookkeeper information to prepare the financial statement and do the analysis and update the management. So here, accounting involve measure profit and loss. So this is one of the job for accountant. Accounting is the recording of financial. Recording, the word recording indicate this should be the bookkeeping job. Bookkeeping is involved communicating financial data. This is the analysis part. After the preparing the account, accountant have to do the job, not the bookkeeper. Bookkeeping required the use ratio calculation after you ready the financial statement. You can prepare the ratio analysis. So this is also not done by the bookkeeper. So the answer will be A. Next question. Okay, question number 2. The balance remaining on the book of a business after the preparation of the income statement include the following. So what was the total of the liability? Liability got two types, non-current liability and the current liability. So which one is a current liability, which one is non-current liability? We identify out all the items first. Loan from XY Finance. So this is non-current liability. Wages due is a current liability. Rent prepaid, this is a current asset. Trade receivable is a current asset. Trade payable is a current liability. Motor vehicle is a non-current asset. Provision is part of this to reduce the cost. So this is also non-current asset. So the item we should take is 10,000, 620, and then 465. So based on the amount, we calculate, we get 15270. So the answer should be C. So next, move on. On 2nd, Nina received a check from Zafar, a credit customer. On 12th, the April, the check was returned unpaid by bank. That means bound check or check rejected. What entry would Nina make on the 12th April? On the 2nd, when Nina received a check from Zafar, he will debit the bank, credit Zafar. But now the check was returned, rejected. So he will put into the double entry, debit Zafar. He will return check to the Zafar and credit the bank. So the answer should be donkey. Question 4. N is a trader. On 1st April, Cindy account in N ledger show a credit balance, 520. The following transaction took place, these two transactions. Which statement about the balance on Cindy account in N ledger? This is stand from the N point of view to prepare the Cindy account. So we open the T account. On 1st April, Cindy account in N show a credit balance. That means balance brought down 520. That means Cindy is a supplier, which is a trade payable, and return goods 30 to Cindy. Cindy will receive, this one is purchases return 30, and bought goods 210 from Cindy and pay in cash. This double entry don't put into here. The double entry should be debit purchases, credit the cash. So nothing to do with the Cindy account. So which statement about the balance on the 30th? So what is the balance carried out amount in here? So take 520 minus, so we get 490. So who is owing who? N is owing Cindy. So the answer should be A. N owing Cindy 490. Okay, next. Question 5. Goods bought on credit by Tumilo from Tibogo are returned before they are paid. Tumilo keep a full double entry. Where will Tumilo record the return of goods? Okay, so this is stand from Tumilo point of view. Okay, goods bought on credit by Tumilo. That means this is a buyer, this is a seller. Okay, are returned before they are paid. So Tumulong will record the goods this buyer buy. That means purchases return, because return good purchases return. So who received the goods when purchases return? Seller will receive the goods. So we have to debit Tibogo credit purchases return. Okay, now here that where we going to record this transaction, in what ledger? Tibogo is under purchases ledger because supplier. Purchases return is under the general ledger. So there are two ledger involved, purchases ledger, general ledger. So the answer should be C. Question 6. Dave supplied goods to Peter on credit on 1st April. Peter owed. Okay, we see who is from which point of view they are talking about. What was the closing balance on the statement? So statement of account, who will issue it? Dave is the one supply the goods to David. That means Dave is the one who issue the statement of account end of the month. So beginning of we stand from the Dave point of view to prepare the Peter account. Okay, so Peter owed Dave 440. On 7, Dave sent invoice. This invoice refer to the sales, 360. Check after deducting $11 cash discount. So here we have bank, 429. And then this discount is a discount allowed because customer. This is a customer. So we have $11. So this one to pay off the balance breakdown. Debit note, don't go and take. We only take the credit note for the recording. This is a document from Peter to request the deduction. So we have to take credit notes as the date for the amount. So here we will put sales return 50. So what will be the closing balance? So the closing balance will be taking the total debit minus the credit. So here offset near off already. This equal to these two. So 360 minus 50. So we get 310. So the answer should be both. Question 7. What is the recorded in the sales journal? So sales journal is talking about the credit sales to the customer. Only credit sales. All these items, all money received, this is under the cash book. All sales transaction, these are all sales transaction under the sales account. Cash sales transaction, these are under the cash book. Credit sales transaction is under the sales journal. So the answer should be donkey. Next, move on. Question 8. Which statement about a 2-column cash book is correct? 2-column cash book means that cash and the bank only. This is a ledger account for the bank transaction only. This is wrong because both also appear. So this A and B are wrong. It is a book of prime entry. Yes, it's one of the book of prime entry. Book of prime entry, you have 7 books. Sales journal, sales return journal, purchases journal, purchases return journal, general journal, cash book, and petty cash book. So this is all the book of prime entry. It's record cash discount. This cash discount, if we include this one, this is called 3-column cash book. 3-column cash book. So the answer should be C. Okay, now let's continue. Question 9. Which statement about trade discount are correct? Trade discount to encourage the customer buy more. Okay, it is debit to the supplier account. No accounting transaction for the trade discount for the supplier and the buyer. They only record in the journal. No accounting debit credit for the trade discount. It is only give if the invoice is paid within the period. This is referred to the cash discount. So this is not the answer also. Okay, it is show a deduction from the price of goods on the invoice. Yes, this is one of it. It show a deduction on the invoice. It is used to encourage bulk purchase. Yes, this is also the answer. So these two are the answer. That means donkey is the answer. Next, move on. Question 10. Why is a trial balance is prepared? Why we prepare the trial balance? There are few purpose of it. To analyze the financial information. This one we cannot analyze financial information because this is just a balance at the end of the year. To assist preparation, this is one of the function of the trial balance. To control the cost of the business, this is not. This one you can use income statement to check. To evaluate performance, so this one also can use the income statement to check. So the answer should be B. 11. The income statement of a business show a loss for the year 16,000. On checking the book, the following error were discovered. No adjustment has been made for the insurance prepaid. So when we have this not prepared, what we got to do, when we adjust it, we will have to debit other receivable, credit insurance. So this is a double entry. No entry has been made for the bank charge. The double entry will be debit bank charge, credit the bank. So what was the correct losses? So we have the loss for the year. Loss for the year 16,000. After we adjust this credit side, this will increase the profit. And this one debit bank charge will decrease the profit. So these two plus minus this. So we should get the losses. $16,140. This is a net loss. The new loss for the after adjustment. Okay, now let's continue. Question 12. Peter bank statement show a debit balance of 600 on the 1st April. The following transaction took place: check deposit, payment, direct debit for the insurance premium, credit transfer. What was the bank statement amount? Okay. Here, if we take the opening, okay, we have to adjust the, okay, I put in the amount first. Show at the beginning. This is the beginning. And no, this is end, this is beginning. So we have the debit balance 600. During the month, total check deposit is 7400, and then payment is 6200. Direct debit for insurance. That means this one we haven't deducted from the cash flow. This is cash flow point of view. So we have to deduct. Credit transfer from customer. So we have the credit transfer from the customer, which is customer pay directly. So this is our new balance carried out. Let's calculate what is the cash flow first. 8,000 plus 450 minus. So we get 2070. So this is the balance carried out we get. But this one, you take notes. Under the bank reconciliation statement, if we have this amount, okay, cash book is 2070. We have these two amount, okay. They didn't mention this one. They assume that we haven't deducted from the bank. So the amount should be take 7. The check deposited is not it add into. So we have to add the check pay. Check pay is 6200. This is the unpresented check. And then this uncredited amount 7400. So let me calculate first. 2070. So we get 870. So this is the amount that we get. So the answer will be this one, because you get positive. The bank statement, if a positive, that means it's in the credit side. So this is the amount should be. On 13, a sales ledger control account has a debit balance 10,000. It was found that 2,000 contra entry to the purchaser's ledger control account has been entered on the wrong side of the sales ledger control account. Okay, so this one, debit balance sales ledger control account 10,000. It was found 2,000 contra entry to the purchaser's ledger control account has been entered wrong side. So we accidentally put into here. By right, contra should be in here. So what we got to do, we have to reverse the wrong entry and then we'll put back the correct entry. So basically total credit side is 4,000. So what is the correct debit balance should be the correct one. So take 10,000 minus this total 4,000. So we will get balance 6,000. Take this minus this. So the answer should be A. So this entry is 1 to reverse the wrong amount. Second is to put back the correct amount. Okay, question 14. A business has a new extension to the workshop. That means this is a new non-current asset. It's incurred the following expenditure: building costs, legal fee, air conditioner system for the original workshop. This is air conditioner system. System means that this is a non-current asset. Even though for the original workshop, this is still considered non-current asset. Whereas air conditioner for the new workshop, this is quite clear. This one is non-current asset. Decoration to the original, this is not the non-current asset. This is to the existing. Decoration, this is under the, not consider the capital expenditure. Decoration to the new workshop, this is workshop new extension. This is yes. So basically we have to plus this, okay, and then this one also, and this one, except this one, don't put. So let's calculate, see whether correct or not. Plus 800 plus 2300. So we get 71,000. So the answer is 71,000. So let's move on to the next. Okay, 15. A non-current asset will depreciate at the end of the first year of ownership using the straight line method. So residue, the formula for straight line, using this formula, we have to take the cost minus residue value divided by the number of the year. So it was then found that the reduction balance method 30 should has been used. So reduction balance method, because this is the first year, take the cost minus the provision or depreciation and then times 30%. But because this is the first year, this one provision is a 0. So you take 20,000 times minus 0 times 30%. Okay, so here you get 20,000 times, you get 6,000. This is a depreciation under reducing balance method. Whereas in here, the cost is 20,000 minus 4,000 divided by 4. 16 divided by 4, we get 4,000. So this is under the straight line. What was the effect on the profit for the year correcting this error? This is a charge. This is additional 2,000. So additional 2,000 will cause the additional depreciation 2,000. This will 2,000 2,000. This 2,000 will reduce the profit by 2,000 as well. So here decrease by 2,000. 15 should be the A. Now next. The company financial year ended on 31st December 2019. On 1st December 2019 is pay rent 8,000. For 4 months ended 31st March. What was the opening balance on the rent? Okay, we open the T account. This is the rent. So a company financial year ended 31st. On the 1st December 2019, it pay rent 8,000. So this is a bank. 8,000. For 4 months ended 31st, that means is that here they are to 3 until this amount for 4 months ended. Okay, this one is for 4 months ended, maybe 1 month equal to 2,000. Ended 31st. So how many months consider prepaid from the 1st Jan to 31st March 20, total 3 months is a prepaid. So this is a prepaid amount, balance carried down will be 6,000. Okay, so the amount that this prepaid amount opening balance will be sitting in here, debit side. So this 6,000 will come to here. So we have the debit balance 6,000. So the answer should be donkey. Okay, now let's continue. Okay, 17. Alice financial year end on 31st December. The balance on her book on 1st Jan. So this is balance on the beginning. What do this balance represent? This is a debit, current asset. This is a credit, current liability. Both also other income. So this is the debit side, means that income accrued. This is the credit side liability. This is the income prepaid. Income prepaid is a liability. So here commission received, income accrued, which is outstanding, outstanding. And then this one is a prepaid, which is the prepaid. So the answer should be B. Okay, let's move on. 18. Joseph sell goods on credit and maintain a provision for doubtful debt. He want to increase his provision for doubtful debt 250, which at journal entry record increase. So this amount had to increase by 250. Double entry for the increase is debit, income statement, credit, provision for doubtful debt. So the double entry, debit, income statement, debit, income statement. So the answer should be C. Okay, now let's move on. On 19, question 19, which item are deducted from the gross profit when calculating the profit for the year? Okay, balance on the product provision. So here deduct means expenses. Balance on the provision for this one is a balance carried out. Balance carried out sitting under the SOFP, under the current asset. Deduct from the trade receivable. Carriage paid on goods supplied to customer. This is a carriage outward. Carriage outward is one of the item. Deduct expenses. Drawing made by this one is under the capital section. Deduct from capital section, not from the profit. Wages paid to during the year. So wages pay is one of the item. So it should be 2 and 4. So the answer should be donkey. Okay, now let's continue. On 31st December 2019, John has net asset of 2,000 and capital 2,000. On 1st Jan, goods cost 140 was sold on credit. So this is the double entry. This one, profit, make profit. So 220 minus 140. So the profit is 80. So this one, profit increase, capital will increase. What was the effect of this transaction on the statement of financial position? Talk about net asset. Okay, net asset, the effect, this goods is under inventory. This one on credit means that trade receivable. So inventory decrease 140. Trade receivable increase 220. The differences is also 80. So total increase net by 80. So increase 80, increase 80. So the answer should be B. Let's move on. At the end of his financial year, Raminder made an adjustment for rent owed by the tenant. How did this affect financial? So make adjustment owed, rent owed by tenant. I mean, this is an income. So income owed end of the year is asset. So we will debit other receivable and credit rent receivable. So this is an income statement account. This is under current asset under the SOFP. So here the financial statement profit. When we credit this one, rent receivable credit is increase the profit. Current asset, when we debit this one, it will increase. So the answer should be donkey 21. Now let's continue. 22. The owner of a business took goods for his own use but forgot to make an entry in the account. What was the effect of this error? 2. Double entry should be debit, drawing, credit, purchases. So this is double entry, but forgotten. So what was the effect of this error? Purchases forgotten to adjust. So our cost of sales will be overstate. When cost of sales overstate, gross profit understate. Gross profit understate, profit will be understate. So understate, understate. Now come to the capital employed. Okay, this one is just a little bit. Take notes. When you forgot to take this one, okay, so talk about finish up this one. Profit understate. Profit understate, capital will be understate. But this drawing, when drawing is omitted within the record, drawing understate, capital will be overstate. So these two, you notice one up, one down. There is no effect. Okay, capital employed have two components. One is a capital, one is a non-current liability. Since they only talk about this one, so this is the effect for this capital. So this answer should be the one. So let's move on. 23. Rajesh and Sunny formed a partnership on 1st January 2019 but did not prepare a partnership agreement. So when there is no partnership agreement, take notes, everything no, all equal, except the interest on loan is 5%. That's all for the no partnership agreement. So they decided to draw up a partnership agreement for future year. Which item would be most beneficial to Rajesh? So when they have a partnership agreement, what is the benefit to the Rajesh? Look at the Rajesh. Rajesh contribute more capital, take more drawing, share the workload, same. So here, which item will be most benefit? Interest on complete capital. Yes, because he contribute more, he should get more return. Interest on drawing, this is not good to him because he withdraw more. Limit on this is also not good for him. Partner salary basically no difference because both are the same contribution. So the most benefit to him is the A. Okay, question 24. Harry and Jen are in partnership. The following information related to Harry for the financial year. Salary, drawing, share of profit, The opening credit balance on Harry current account was 28,200. What was the closing balance on his current account? So here, opening credit balance on Harry current accounts. Let me credit balance. We have the balance right down, credit balance 28200. And then the salary belong to him. So salary 8,000. Drawing current account 2800. Share of profit is 4600. And then the opening, okay, this one done. What was the closing balance? So balance carried out. So take this off minus this one. So we will get 28200 plus 8,000 plus 4,006 minus 2800. So 38,000. So the answer should be boy. Okay. Now let's move on. Okay, question 25. Which item is shown in the income statement of a company and statement of change in equity? So, and both must be both. Change. Okay. Interest on debenture. Debenture only appear in the income statement. Okay, ordinary share dividend pay. So this one only appear in the equity. Profit for the year. Income statement have. Equity also have. Statement change or equity also have. Transfer, this is on under the equity only. So both appear means that C. 25 should be C. Now next move on. 26. Hassan capital decreased by 200 over the year, even though he made a profit of 7,000. Which transaction caused this? So formula to calculate capital. Opening capital and then plus profit minus drawing. Closing capital. This and this reduce 200. Okay, even though made a profit 700. Let's assuming that this amount, okay, and one more, since that they're talking about capital, additional capital, so we plus additional capital. So the differences, these differences is reduced by 200. The net reduced by 200. So what can cause the 7,000? Which one add up can be the differences? Here, you have 1,000. If you put 1,000 here, you put 8,200. You saw this one, you have reduced 200. So this answer should be A, because you must reduce net amount 200. Okay, now let's move on. 27. Ahmed provide the following information. Trade receivable at 1st January for the year ended 31st December. By how much has the trade receivable increased by end of the financial year? So trade receivable account. Balance right now, 15,000 here. Only take the credit sales, don't take the cash sales. 85,000. Check received from customer, 65,000. Irrecoverable debt, 2,000. So debit credit side, you must be very clear, then only easier for you to tackle the question. So we have 85,000, 85 plus 65 plus 2 minus 15. Hey, sorry, my mistake. This one, this is the credit sales should be in here. It is 5,000 should be in here. This is my mistake. So 15 plus 85 minus 65 minus 2. So our balance carried down should be 33,000. So the answer should be C. So this should be the answer. Okay, so wait, let me see. By how much has the trade receivable increased? Oh, okay, so this one balance carried down. The question is talking about these two, the differences. So we cannot take this one. We have to take 33 minus 15. So 33 minus 15, we get 18,000. So the answer should be A. 27 should be A. So read carefully, they purposely bold it so that be careful, don't put wrong amount. Okay, now next question 28. Gordon provide the following information. Gordon took the goods 7,000 for his own use. So revenue, opening inventory. Okay. What is the purchases amount? So we take the simple income statement format. Revenue less cost of sales, opening inventory, purchases. Because this is the drawing, so we have to minus the drawing amount in here, purchases. Okay, next is that. Okay, next is that closing inventory. So we put in the amount 90,000, and then opening inventory 8,000. Closing inventory is 2,000. And then markup, okay, markup means that here is a gross profit, markup 50%. So here is 100%. Cost of sales is 100%. This one will be 150%. So we use this information, find the purchases. So take this one, divide by this one times 100. So we get 90,000 divided by 150 times 100%. So we get 90,000 divide 150 times 100. So we get 60,000. So this is 60,000. And then using this 60,000, here is got 2,000 and then 8,000. And then goods taken is 7,000. So these two minus. So to get this amount, we have to bring these two all into that. So 60,000 plus 9 minus 8. So we get 61,000. So the answer should be 61,000. So the answer should be donkey. Okay, the next one. 29. A trader provide the following information. For the year ended 31st March, revenue, purchases. What was the trade payable turnover? The formula for trade payable is trade payable over the credit purchases. Okay, times 365 days. So our trade payable is 9765. Credit purchases is 11500 times 365. So 9765 divide 115000 times 365. So we get 30.99. So round up to the 1. So we got the 31 day. Okay, continue. 30. On 1st January 2019, current asset totals 16. And on 31st, the current liability has increased by 50 and current ratio was, what was the value? Okay, here 16,000. So here will be 8,000, half of it. On this 31st, current liability increased by 50%. So 50% increase means that half 4,000, 4,000 plus 8 will be 12. So this is the okay, one more zero already. Okay, with 12,000, this amount. And then current ratio is 1.5. So here is 1, here is 1.5. So what is the amount in here? So this amount, you can bring this one to here, equal to 100 times 1.5. So which is the 12,000 times 1.5, which is 18,000. So the answer should be B. Now let's move on. Question 31. A company provide the following information about the liquid asset. Okay, liquid ratio, sorry. So the liquid ratio keep getting better and better, which will explain the change in the ratio. So liquid ratio not include the inventory. So we don't talk about inventory. So why can this one can be better? Your current asset must be increased, current liability decrease. So which one that can fulfill this? Current other payable decrease. So this one it decrease. Trade payable increase? No. Trade receivable decrease? No. So the answer should be B. Okay. Question 32. Which use of the accounting statement is which user of the accounting statement is interested in the past performance and take remedy action when necessary? So here government just interested with the tax collection, investor just like the dividend and the return, manager in charge of the company performance, so they will take the remedy action. So this one should be the C. Supplier just want to make sure the debt pay on time. Okay, 33. Rashid financial year ended on 31st. He pay rent on February, 1st May, 1st August, and adjustment was made for the rent prepaid. Which accounting principle, when the end of the year, rent prepaid had to adjust? This is about the matching concept. So derivative talking about debit and credit. Money measurement is talking about all the value recorded must have the dollar and cent in the accounting. Prudence is not to overstate the profit and the asset. Okay, 34. Which statement is described going concern principle? Accounting method must be used consistency. This consistency, it is assumed that the business will continue to operate forever. This is a going concern. Okay, this is a for continual operate. So the answer should be B. Revenue earned when legal title is passed. So this is the realization. Okay. The business treated as a complete separately from the owner. This is a business entity. Next, 35. Break purchase a machine 1,000 on first. The machine was expected last for 4 years and have no residue. On the same machine cost to purchase, at which value should the machine be included in the statement of financial position? So the value is 1,000 and expected to be last for 4 years, no residue. That means divide by 4, we get 250. This is a depreciation. End of this year, we will calculate 1,000 minus 250, 750. This is the net book value. So in our financial statement, we have to record this amount. So here, current cost with no depreciation, current cost with 1 year depreciation. This is the information. Answer should be original purchase price. No, this is a current cost is referred to this one. So this is not original purchase price. This is the original purchase price with no depreciation. This is wrong. Original purchase price with 1 year. This is the answer for the question D. So that is for the paper that I prepared for today. For this, okay, for the May, June 2020.